So this video is all about ICOs, so initial coin offerings, and why you really do need to stay away from them. So first of all, let's look at IPOs first. So an IPO is an initial public offering, and this is where companies try and launch loads of money to then list on a stock market. So you may have a company over here, so a limited company over here, and then what they then do is they sell at least 25% of their stock to the public. And when I say the public, so most of the time it's to high net worth or sophisticated investors, etc. And some of the time it's quite tricky for the average Joe to invest in IPOs. But long story short, a company wants to raise it. Sometimes it's like a secret exit for the founders that want to make a ton of money, or it's just just a big cash raise. So they launch their company onto the stock market, whichever stock market it may be, and they raise loads of funding. Now, typically, the average IPO costs around $3 million and about 2 to 3 years to set up. So it's very costly. So that's why you only see a lot of big companies get on. I mean, just go to the list onto the FTSE 100. You're looking conservatively with all the other fees at least 500k, and that's just the listing, let alone all the other stuff. So IPOs are a very lengthy process. Now, an ICO, an initial coin offering, is basically the crypto version of an IPO, except it's terribly unregulated. So you know, a couple of kids in a bedroom could create a 4-page PDF white paper or an 8-page one or whatever, launch it and launch their own ICO and then raise millions, and that has been done. We've seen some ridiculous ICOs. As in, there was one company which was BAT, or basic attention token. They raised $35 million in 24 seconds. Which is absolutely ridiculous, and in a moment I'm going to show you a whole bunch of other ICOs. Now, what I want to show you primarily is why you need to avoid them, because IPOs and ICOs are actually very similar. So first of all, whenever someone wants to launch an IPO, it's not, I mean, I made it sound very easy, and in the old days it was. Now it's got a little bit trickier. So what you tend to have these days is a seed round, or otherwise known as a pre-sale. And sometimes you have a seed round and a pre-sale. In fact, that's actually what's happening more than not these days. So you have a seed, you then have a pre-sale, and then you have a public sale. And what tends to happen is that during these things, investors at seed round may get, I don't know, 100% bonus. So they basically get 2 for 1 for all the money they get in. Pre-sale, you can have anywhere from, well, sometimes actually 20 to 50%, and public sale can be anywhere from sort of 10 to 50%. Obviously, I mean, some cryptos just do a public sale, and some do a pre-sale and a public sale. But the bigger ones, they tend to do a seed round. So the seed round here is simply just to get some initial funding. It may be 100 grand, it may be £1 million, and that's to basically do the ICO, because these days you have to do a bit of a roadshow where you basically get all your marketing material out, and then you go and hold events around London or wherever you may be, trying to drum up support. So I mean, you don't raise $35 million in 24 seconds unless you've got pre-approved support. So when you launch, you go, hey guys, this is it, and then everyone piles in. So that's, yeah, the seed round is basically to get some early funders to help fund the whole thing. That's why you get a massive discount. You then have pre-sale, and normally with pre-sale and seed, you'll have to sign all sorts of things like KYC, so know your customer, AML, anti-money laundering, and there's also anti-terrorist type stuff. And normally you may also have to be a sophisticated investor. Not always, but sometimes. Yeah. So that's basically it. And then it launches. People get it gets listed on an exchange or two, and then you're off to the races. Now, there's a couple of reasons why I would stay clear of it. So let's jump onto the chart. So first of all, here on coinmarketcap.com, you can see some new ICOs that have listed, because you just go to trending, recently added, and there we go. So it shows you all of the ones that have listed recently. Now, obviously, you wouldn't touch any of these ones with a barge pole, because it's got questionable market cap, and we don't know pretty much anything, and sometimes the daily volume is a bit crap. So let's have a look at, oh, here we go, Daddy. Okay, so normally my lower limit is $5 million market cap, and I'd like to see over $100,000 in terms of daily volume, minimum really. So here we have something which I've never come across before, and look at this. So I'm going to keep that one up there. I'll show you another one. In fact, let's just pick on a random crappy coin. No, it's not showing you when it launched. Let's look at something which has been open for a couple of days. Here we go. No, it's not showing. Sometimes, because they're so new, the charts don't show proper stats. So let's look from a bit further on. Okay, what I'm going to do, just to save your time, I'm going to pause the video, and I'll come back when I've got a few charts up. Okay, so yeah, what was happening is that I was clicking on some random ones where they don't even have the stats. That's why. So I've just opened up a whole bunch of these where they've actually got some market cap, etc. And have a look at the trend. So this big blue line going up here is the day they launched. So they launched with just under $31 million market cap at 47 cents. And the green line is the price. And then it drops, and it's now 37 cents. Okay, so that one dropped. Ucash. Boom, drop. Swarm, here's another one, big one, and it launched at 81 cents. It's now 65 cents, as you can see here. Medical Chain launched here 27. It's now 22 and falling. Bluezell, here we go. What was that? About 62. Okay, it's kept its. So it did hype up a bit, but it did hit a low of around 50 odd. So what you tend to see is that with most ICOs, you tend to have a sell-off in the first few weeks. So here, this one, it did reach a lot lower, but it's pretty much even there. So 80% of ICOs crash in the first month. So here, launched at 43, and it's now 28, and they crash anywhere from 20 to 80% in price. Jesus coin, Jesus bloody hell, who on earth would invest in Jesus coin? So yeah, same with this one. So let's just pick on a random one. I know Ucash. Why do you think that the market, like an ICO, falls straight after listing day? Yeah, you probably guessed it. It's because of these people here. Basically, what happens is that anyone that got in seed round or pre-sale, depending on what the ICO is doing, they got given a really good bonus, and they know that the day of listing is normally going to be the high for that month or for the first 30 odd days. So what do? They sell. That's all they're doing. So let's just clean this, and let's start. Let's draw some lines. Wait, sorry, I can't draw a straight line. So basically, the price does nothing. I'm really struggling with straight lines here. It goes up, and then what happens is the price goes down here like this, and then eventually it goes up. And it's because everyone is selling here to recoup their capital. So if they put in 500 grand, they're pulling out 500 grand, but because they got a bonus, they've still got coins in the game. So they've effectively got free coins, and then they move on to the next ICO. So that's one, in fact, that is the main reason why I don't like ICOs. And also there's a thing called opportunity cost, op cost, and MRR. So first of all, opportunity cost, basically most or 90% of ICOs require you to dump Ether in, okay? So you put Ether in, and normally an ICO is anywhere from 1 to 12 months. I think the sweet spot normally is around 6 months. So you're buying Ether at some rate, and then you're dumping it into an IPO, and you're sat there. You've basically parked your Ether there for 6 months, and you're not getting any of the growth of Ether. And let's just have a look at what happens with Ether. So Ethereum, here we go. Here's a chart. Boom. 6 months is a long time. So let's say something lists today. What is it? February. Let's go back a few months. So Jan, December, November, October. Yeah, okay. So basically, let's say late summer you invested in an ICO around this area, even at the high at $369, you've missed out on all of the growth. So yeah, this is basically MRR, market runaway risk. So yeah, so you're missing out on market runaway risk, i.e. basically these go hand in hand. It's opportunity cost, basically. That is it. What else? Your money could most likely grow a lot faster over 6 months by not parking it in an ICO. So if there is something that you really do like, if you can get in seed round, great, do it, or even pre-sale. But if you can't, just wait till it launches, give it a month, buy the relative lows, and then move on. So yeah, that's why I don't like it. Now so it's starting to scare a lot of venture capitalists and corporate financiers, because in 2017 the whole IPO market, which has been going for hundreds of years, decades, raised $11.6 billion in 2017, and ICOs pretty much started properly in 2017. And this chart, this was taken at the end of November. Don't forget, there were at least 25 ICOs in December, even during Christmas. So yeah, I think it's most likely that the ICO market raised at least $6.5 billion in 2017 alone. And in yeah, look at this, Filecoin, 257 billion, EOS, 200 million. Like there's loads of really big ones out there. And yeah, so here are some of the big ones. But 2018 is going to be absolutely huge. There's going to be way more. And so I won't be surprised if ICOs dwarf IPOs this year. So yeah, hopefully that makes sense. Be aware of yeah, opportunity cost, market runaway risk, etc. Sorry about all the squiggly lines. I just quite like drawing in MS Paint. Anyway, so yeah, see you in the next video. Toodles, bye bye.